Hey everyone, welcome back to Business Brain Rot, where we turn confusing finance news into simple, actionable insights. And today we're diving into a hot-off-the-press article from Yahoo Finance. These three areas of the stock market will be the most likely winners of a Fed rate cut, strategist says. If you're wondering how the Federal Reserve's next move could supercharge your portfolio, this is for you. I'll screen record the whole article right here, highlight the key gems, and share why these sectors could be your next big play. Stick around, number 3 might surprise you. Let's jump in. Alright, here's the article on Yahoo Finance, published just recently. The author is Liz Young, head of investment strategy at SoFi. She's a pro who's got her finger on the pulse of the markets. Her big thesis? With the Fed poised to slash interest rates soon, 3 overlooked areas of the stock market are primed to rally hard. Why? Lower rates mean cheaper borrowing, which juices up certain sectors that have been starving for it. As Liz puts it, these aren't just random picks, they're tied directly to how rate cuts ripple through the economy. And get this, recent market moves are already teasing the upside. If you're holding large caps like the Magnificent Seven, this could be your cue to diversify. Let's break it down one by one. First up, small cap stocks. If you've been glued to mega caps like Nvidia or Apple, Liz says it's time to look smaller. Small companies rely way more on debt to grow, so when rates drop, their borrowing costs plummet and boom, they catch fire. She quotes strategist Thomas. Many investors seem to be talking about the opportunity for small caps to not only catch up but find durable outperformance during this cutting cycle. Spot on. We've already seen small caps rally lately, and Wall Street's sentiment is flipping positive. Think of it. While big tech chills at low rates, these scrappy underdogs could surge 20 to 30% in a full cutting cycle. My take? If you're new to this, check the Russell 2000 ETF easy entry point. But remember, small caps are volatile, so don't go all in without a plan. Moving on to number 2, the financial sector. Banks and insurers have already perked up this year, but Liz sees even more juice post-rate cut. Sure, lower rates squeeze their interest income a bit, like who wants to earn less on loans? But the flip side is huge. Cheaper money means more lending. Businesses refinance, consumers borrow for homes or cars, and suddenly loan volumes explode. Thomas nails it. I think a big part of some of that is also the fact that the treasury market has not gotten out of hand. Translation: stable bonds mean no chaos, so financials can ride the wave. We've seen the sector up nicely already. Imagine that on steroids with rate cuts. Pro tip: look at big banks like JP Morgan or regional players. They're set to lend like crazy. But watch for any recession signals. Financials hate those. And now the sleeper hit, number 3. Real estate. This one's personal for a lot of us. The housing market's been frozen solid for 2 years thanks to sky-high mortgage rates. But a Fed cut that drags 30-year mortgages down, thawing everything out. Liz's words via Thomas. You probably see the housing market start to feel a little bit better about itself because mortgage rates are likely to come down. Caveat: if the 10-year Treasury yield stays stubborn, the drop might be modest. Still, even a 1% dip could unleash pent-up demand. More home sales, flips, and REITs popping off. Why I love this. Real estate investment trusts are screaming buys right now. Think VNQ ETF for broad exposure. If you're house hunting, congrats, this could be your window. So there you have it, the full article breakdown. Small caps for growth, financials for lending frenzy, and real estate for that sweet housing rebound. Liz wraps it up, implying these are your rate cut MVPs, especially as markets shrug off some economic wobbles. My hot take? With the Fed's first cut likely in September, now's the time to position. But diversify, folks, don't bet the farm. What's your play? Drop it in the comments. Small caps or real estate. If this helped, smash that like button, subscribe for weekly market deep dives, and hit the bell so you never miss a rate cut alert. Thanks for watching. See you in the next one.